From inclusive finance to sustainable economies, Africa is building its future. This is The Sound of Progress, a podcast by FSD Africa. This is Financing Africa's Future.
Hello everyone, and a warm welcome to Financing Africa's Future, a podcast by FSD Africa. And today we are quite pleased to be joined by Zareena Camroodien, who is a chairperson of the Africa Pensions Supervisors Association. Thank you very much, Zareena, for joining us.
My pleasure. Thank you for having me.
Zareena, maybe we could kick it off by you introducing yourself to us.
So as you've indicated, I'm the chairperson of the Africa Pensions Supervisors Association. I'm also the head of fund governance and trustee conduct and Frontline Supervision at the Financial Sector Conduct Authority in South Africa.
Wow, thank you very much. And now that you've mentioned South Africa, I'm quite keen to know how is the pension industry performing even before we get to speak about the broader African outlook.
Well, the South African pension terrain is quite a solid one.
Right.
We've got some of the largest pension funds on the continent and even in the world.
Right.
So we have approximately $376 billion of assets under management.
Wow.
So that is quite significant, and I think it's probably the most significant
The
amount,
largest
certainly
in Africa.
But coming back to your question about adequacy,
Right.
we're not saving enough. South Africans aren't saving enough.
Right.
So that is something that certainly needs our focus. And we don't have a mandatory system, for example.
Right.
So the government is looking at various options,
Right.
such as auto-enrollment, as we have in the UK,
Right.
to increase the coverage of formal sector workers. And then, of course, we have to consider what we're going to do about informal sector workers, because 30% of the South African economy comprises informal sector that don't have any coverage at present.
So Zareena, let's speak a bit about the Association of Pension Supervisors in Africa that was established together with the industry in partnership with FSD Africa, speaking to us about the objects and the goals of this industry association.
Well, the APSA was developed to have an African voice.
Right.
On the global stage, because that was something that was lacking.
Right.
So it provides us with an opportunity to discuss African issues
Right.
with other regulators and supervisors across the continent,
Right.
and also to develop and strengthen the pensions ecosystem across the continent, the regulation thereof, and
Right.
also the enablement of pension systems across the continent.
Well done, Zareena. I've attended one or two of your past conferences, and I think it's quite very many stimulating conversations and very heartwarming seeing the supervisors across the continent sitting at the same table, looking at the challenges, innovation, and what else could be done to enhance the sector performance in the continent. What would you say are some of the key milestones of APSA since you came together as a body?
Well, I think it's a milestone that we are now 22 countries that belong to APSA.
Well done.
Just given the short time that we've actually existed.
Because actually you've been not around for a long time.
No, not at all. Informally,
Yes.
it was for a few since 2019.
Right.
But in fact, formally, we were registered in 2024, January 2024. So in that period, to have 22 members, I think that
in a period of 1 year, you've grown your membership from 0 to over 20.
100%, and I think that's a great achievement, and we're growing.
Right.
And fortunately, platforms such as this, like the PAFMA conference,
Right.
Also affords us opportunities to grow the membership as well. So that has been one of, I think, the major achievements. The other major achievement is that there's been quite a bit of development going on for coverage of informal sector workers.
Right.
So, as you may know, the Ijohiza in Rwanda has been very successful.
Right.
But Uganda, with our assistance,
Right.
is also embarking on that coverage for informal sector workers with the help of APSA.
Right.
So those are some of the milestones, and of course, generally as well as the information sharing. So, for example, South Africa rolled out the two-path system.
Right.
And we've shared our learnings with many of the other jurisdictions across the continent.
Right.
So that has been another, I think, major achievement, as well as, informal sector workers are really getting attention and how to propel coverage for them.
Right.
So that's ongoing, as well as the information sharing, because now there's a pensions information hub, a fund managers information hub, which we believe will facilitate easy decision making. It informs policy across the continent. So I think those are some of the huge milestones that we were actively involved in.
I mean, well done. You've achieved quite a lot within a fairly relatively short period of time. I want to go back a bit to the issue of the informal sector, because as you say, a lot of the pensions industry in Kenya right on the formal sector, yet huge sections of our population are informal. They're either self-employed, doing small micro businesses. Of course, you spoke about the situation as it pertains to South Africa, but I suspect actually South Africa may even be doing better than many other African countries. And I really wonder, from a regulator's point of view, what are some of your thoughts and strategies so that we can also take care of the huge sections of the informal sector and bring them within bands of quality pension products and ensure they're able to save for their future?
Now that's a very good question, because as you rightly point out,
right,
the challenges of the informal sector not having pension coverage
right
is a huge problem. I mentioned in South Africa it's 30%, but you're correct. The rest of the continent, in fact, it's far worse.
Right.
There are levels of 80 to 90% of informal sector workers who don't have coverage.
Mm-hmm.
So one of the things that we are looking at, as I said, is micro pensions, for example,
right,
which has worked very well in Rwanda, as I mentioned, Ejoiza. So it's really about doing a case study on that and whether that can be replicated. Obviously, also adapted to one's unique circumstances per jurisdiction.
Right.
But those are some of the things that we are looking at. Or if there are other vehicles, to support the informal sector to also save for the retirement, because even our vision as APSA is so that all workers have coverage and have dignified retirements.
Right.
Ultimately, when we retire, that is the aim.
No, thanks for raising those points, Zareena. And actually, I wonder, even for the formal sector, I think I've seen data, and I would good to hear your views about that. Even the formal sector, are we saving adequately for our future?
Well, definitely not. I mean, as I mentioned, even in South Africa, it's quite large amounts that have been saved, assets under management, but we aren't saving adequately.
Right.
So we really have to, that needs to receive our attention, because one needs to save adequately so that we have sustainable income during our decumulation phase or our retirement.
Now, thanks, Zareena. We have seen a state of industry report that has documented, the assets that are being managed by the pensions industry in Africa and where they are investing. And the lion's share is getting invested in government securities, fairly conservative. Here the continent is bubbling with opportunity, be it in infrastructure, in energy, in small and growing businesses. A lot of the new ideas are quite starved of cash, yet the pensions industry is more or less supporting and investing in the government. I don't know, what are your thoughts? How can we help move more resources to the alternative classes of investment?
Well, I think the first step that has to be taken by regulators but also policymakers, government, etc., is to really enable funds to invest across asset classes, including the alternatives that you've mentioned. So what we've done in South Africa, which I think may be useful, is that we have the regulations that enables investments. And I think other jurisdictions have it too, but it's really about relaxing that. So for example, South Africa allows offshore investments of we've increased it recently. When I say recently, in February 2022 to 45%.
Wow.
You can invest offshore, which includes in Africa as well. There's also we've also increased the limit for infrastructure investments to 45%, even though it's per 25% per issuer limit. But it's also to give that nudging, and that enablement, and to encourage really investments into infrastructure.
Right.
What we've also done, for example, which I think may also, be useful lessons, is that we delinked private equity from hedge funds, and we increased the private equity limit to 15%.
Wow.
And hedge funds remains at 10%, but that was a significant increase, again, to stimulate investment in alternatives, in infrastructure, etc. And our Regulation 28, for example, compels us since 2011 already, you must consider ESG factors when investing.
Wow.
So as long as the various jurisdictions enable, such investments, I think that's the first positive step. And then, of course, the responsibility shifts to your funds,
to the private sector, to take advantage of the enabling regulations.
100%. So
very well done, Zareena. I think you have quite one of the very forward-looking regulations, I would say. 45% offshore investment. I think that's quite generous, which I hope, of course, is going to really, I know it has lots of internal benefits in diversifying risks, but hopefully also allowing far much more investment across the continent, because I'm sure there are many good opportunities beyond the borders of South Africa.
Yes, I hope that happens as well. As I said, one has to look at, what the concerns are. Why is South Africa or other jurisdictions not investing as much as they could in Africa?
Right.
But I think if we put in place, the proper risk mitigation strategies,
right,
if there's comfort with governance frameworks,
right,
with strong regulation, information that's readily available, standardized, centralized, I think those are all factors that are going to contribute, to investments in Africa.
Wow, well done on that, Zareena. As we come to our close, you've mentioned ESG, which is a big priority for us at FSD Africa. And I just wanted to hear your thoughts about how you are driving and promoting, ESG and sustainability within the African pension industry.
Well, with us, as I said, Regulation 28 already compels funds to have regard to ESG factors when they invest. And, we've had from the FSCA side, we also drive ESG. We have and of course from the policy perspective, we also have support,
right?
Because we have a green finance taxonomy,
right?
Because that was one of the challenges initially. There are different definitions, etc. So that is also, I think that standardization is driving ESG.
Right.
We also do, we've got a statement, on green, on ESG,
right,
as the FSCA. We have various engagements. We do some collaborations with IFC as well,
right?
As to how to propel ESG, because it is something which is critically important to us. In terms of our regulations that will be enacted, we are also going to ask for firm reporting on ESG. There's already some reporting, but it's not standardized. And of course, if we have that standardization and the disclosure, then we'll be able to better track whether we are gaining the traction that we desire.
So clearly work has started, but then we still need to do more to deepen, to standardize, and perhaps to track better how our members are doing.
100%. But the good thing, again, it's very much and it might be continental wide, but speaking from a South African perspective, funds seem to have an appetite for ESG. That appears to be the case, and there's quite a bit of support. Even from the asset managers, they seem to be keen. Of course, you need to also understand that alpha is required for members, because that is why you have funds. But to invest in ESG doesn't necessarily translate into poorer investment returns.
Yes.
So it's not that you have to choose one or the other. You could get alpha and also do sustainable investments.
I like the way you put it. It's not a trade-off. You're able to hit both with the proverbial one stone. Maybe as we come to a close, Zareena, globally we've seen regulators move to risk-based supervision. I wonder how is Africa faring in this regard?
Well, my understanding is that most of the continent has moved to risk-based supervision.
Right.
But of course, the question remains is that, we were quite compliance-based before. right? It's sort of more a tick box approach.
Right.
So it does beg the question of, from an implementation perspective,
Right.
how much have we actually applied that? So I think quite a bit of work needs to be done in that regard. And that's why at our last conference in Morocco, we actually had a workshop on risk-based supervision, and the implementation thereof. And I think more such engagements need to take place so that we could really bed down and apply risk-based supervision the way it ought to be.
All right, thank you very much. Technology and AI is throwing the entire world upside down. I wonder what the effect has been as regards, supervising and regulating the pensions industry.
So we see a huge uptake in technology, of course,
Right.
For benefits processing, making it quicker. With the two-part legislation, for example, in South Africa, technology,
Right.
people could do their claims on their cell phones. So technology has played a huge part. AI, it's also getting there, but maybe not as widely as technology, broadly speaking. But of course, I think speaking from a regulator's perspective, it's also about ensuring that there's cybersecurity, that there's
Right.
cyber resilience, because technology is fantastic because, it also would enable, for example, we've spoken about the informal sector.
Right.
And fintech has played a huge role in enabling coverage for informal sector workers. For example, again, in the Rwandan case scenario, with
Right.
Ijohiza. So it's a vital role, and we have to move forward because that's where we're at. But again, we need to do so responsibly and carefully.
I couldn't agree more. Thank you very much, Zareena. I think that was quite a good conversation, and we look forward to having future conversations. Very well done. I think you should be quite proud of your leadership of the Association of Pension Supervisors. I mean, coming together just a year ago and having hit the very many milestones that you've said. I think that's some very good work, and we wish you all the best with that.
Thank you very much.
Thank you very much.